Good afternoon, everyone. Welcome back to the channel. Took a little vacation, but we are back. One of the stocks I've been following, down 17%, almost 18% after hours, or actually today, down 18%. Asana, I think this could be a good long-term investment. $15.65, $3.6 billion, down 17% after posting some actually good earnings. This is probably one of the best quarters they ever posted. It's been about 3 years. The stock's been doing nothing. It's been flat. Look at this graph. But fundamentals are improving. Quarter one of 2025, they posted some improvements. I think in the long run, if this company can generate some new revenue streams, improve a little bit of the fundamentals, I think we could actually see this thing move. But as of right now, they currently have a CEO transition, slow growth, and mainly macroeconomic factors are holding stock down. Let's go ahead and check it out today. So Asana, quick rundown, it's a work management platform. They want to be the platform where AI and humans sort of coordinate with each other. Basically, it helps you be more productive in the workplace, especially with the automation of workflow. And it pretty much brings everything into one silo. They have this thing called the work graph, where they track a lot of the stuff happening in your business, and they use their AI agents to sort of simplify things for you. Their earnings actually look good, but the stock is currently down 17%. So I think this is the bottom, guys. I think it's been hovering around here for 3 to 4 years. I think this is the bottom, guys. Let's check out some of these numbers. All right, where do we start? All right, so where do we start? So we'll start with the cash flows. From 2023 to 2025, you could see the trend towards positive cash flow. We currently have 2 consecutive quarters now of positive cash flow from operations, free cash flow per share. So you could see that their fundamentals are improving. So 2024 for them was the first year posting positive cash flow. Wow, just 2 years ago, January 2023, they posted negative 160 million, and now we are at positive 14.9, so huge improvements. So if you look at the chart, guys, I mean, here's the bottom right here. I'll start right here. So from 2022, been nothing but flat pretty much. As you can see, the past 3 years, huge improvements from the negatives to the positives, but the stock price still hasn't caught up, still flat, hasn't done anything. Go down to the cash flow per share. Last year was pretty much the first full year of posting free positive cash flow. So this is the latest data that they just announced yesterday. Earnings per share, total revenue, profit margins. We got net income, and also some KPIs to look at are their core customers and customer spending over 100,000 or more. So this is what Wall Street hates. Their total revenue growth rates, low and slow. They do not like how this company is not growing fast. So posting 187 versus 172, that is up 8.4% year over year. If you look at earnings per share, posting negative 17 cents versus first quarter of 2025, negative 28. That is up 39% year over year. Pretty much for the past 3 years, total revenue has been growing, but just not as fast. And also for the past 2 to 3 years of earnings per share, they have been improving. As you can see, again, there is a trend towards positive earnings per share. Once they get that, I think the stock starts moving. But this is actually one of the best quarters they posted recently for earnings per share, up 39%. Huge profit margins for this company. Pretty much for the past 3 years, 90% profit margins. This company makes a lot of money. A lot of money. All right, so we went over free cash flow, but we'll go check out the year-over-year growth on free cash flow and the improvements year over year. Again, 2 consecutive quarters of cash flow from operations and free cash flow. Posting 0.02 versus negative 0.02, up 200% year over year. And then when you go down to the operations, posting 6.8 million versus negative 1.9. That is up 457% year over year. So past 2 quarters for Asana were really good in their cash flow, up 200% year over year in the fourth quarter of 2024, and then first quarter up 457%. These are some huge improvements in their cash flow, so they are improving that. So go down to net income. They posted negative 40 million. Again, the main reason why they are still posting negative net income is because they do spend a lot of money on sales and marketing, research and development. So we'll go over that in another video, actually, because it is a whole sort of section we got to talk about. Negative 40 million versus negative 63 million, up 37% year over year. Again, there is a trend towards positive net income. They're almost consistently posting positive cash flow every quarter. They actually beat earnings and surprised analysts by a lot. So earnings per share, so April 2025, they beat earnings per share by 154%, and revenue was pretty much in line. But they beat it. They beat it. Stock still went down. This might be a good buying opportunity for this company. I don't think a lot of people know about this company yet. It's not on Main Street yet. But it is growing slowly. It is growing slowly, and you want to get in before everyone else gets in. So I've been looking at this one. Let's go down to KPIs. So Asana has two segments that they look at for their customer growth. This is one of the KPIs we want to look at. Key performance indicators. One of them is core customers spending $5,000 or more. Most recent one, this is quarter one of 2025. Most recent one, they posted 24,297 customers who are spending $5,000 or more. That is up 9% year over year. Basically, for the past 2 years, it's been growing at an average pace of 10% year over year, quarter over quarter. So growing slowly, growing slowly. And then, of course, customers spending $1,000 or more. This is the main target market they are pushing. They have 728 customers now spending $100,000 or more versus 607 last year. That is up 20% year over year. So as you can see, pretty much for the past 2 years, the segment of customers spending $100,000 or more are growing 20% year over year at an average pace versus the smaller customer cohort growing 10% year over year. So both customer segments are growing for Asana. So that's good for the company. So huge improvements kind of everywhere. The main one is going to be from the free cash flow per share and their cash flow from operations. Profit margins are staying at 90%, which is good. Again, we have a lot of insider buying. Pretty much the CEO, who is currently transitioning, he has repurchased a lot of shares. He owns over 51 million shares now. So those are two things I like when I'm looking at this company. CEO is heavily buying, and also cash flows have been improving. The third thing I like about this company and why I think this is the bottom. Why do I think this is the bottom? Check it out. So quarter one 2026 earnings call, the share repurchases. So given our strong balance sheet, they do have a strong balance sheet, guys. Check out their balance sheets. Let's open another tab. 470 million in cash, 470 million in cash, and only 38 million in long-term debt. So they're going to give back to the shareholders with some share repurchases. First quarter, they bought back $15.6 million of stock at an average price of $15. 1 million shares. They bought 1 million shares with $15.6 million. Last month, the board increased the share repurchase program by 100 million. There's no expiration date. As of April 30th, they had 56 million remaining from the previous one. They just added another 100 million. So total 156 million share repurchases available. They are aggressively buying back their stock. If the company is repurchasing their shares, remember, it usually means their stock price is undervalued. It is also getting shorted. So I like that. I like that. So top 3 main reasons why I like this one. So number 1, finally hit free positive cash flow in 2024. And then when you look at the micro, 2 quarters of consistent positive cash flow. Number 2, why I like this company is the huge amount of insider buying that's happening. Well, I guess you could say the huge amount of shares Dustin Moskovich, the CEO, who's currently in transition, buying. He owns over 51 million shares. What is his plan? I don't think he's buying his own company's stock to lose money. He's buying a lot. And then lastly, of course, is the huge amounts of share repurchases they're doing. 156 million. Not financial advice, but take a look at this company. I think this is the bottom. We are down 17% today. Small cap company, $3.6 billion valuation, $15.66 now. Flat for the past 3 years. Is this the bottom? I think it's the bottom, guys. If the CEO is buying, the own company is buying around these prices, they must think it's undervalued themselves. Just a quick little update on Asana. Take a look at my other Asana videos that I made, where I do more of an in-depth analysis of the fundamentals. But as of right now, they just posted some great earnings. They beat analyst estimates. This is probably one of the best quarters they ever posted. Not financial advice, but we do have a position in this, and we'll keep an eye. We will keep an eye on this one. I like this one. We'll keep an eye on this one. Anyways, thanks for watching, guys. We'll see you on the next one.